So we have one of the top-ranked strategists around when it comes to Japanese equities. Kathy Matsui of Goldman Sachs joins us live from the Japanese capital this morning. Kathy, great to have you on the program. Market jitters because some are saying, well, everyone's putting things off right now. Shinzo Abe did that with his speech, of course, and now Hirohiko Kuroda is doing the same at the Bank of Japan. How did you see things yesterday, Kathy?
Well, I think that obviously the markets were expecting the Bank of Japan to come up with additional measures on top of what they've already announced a couple of months ago. But I think you have to recognize that, look at what they announced in terms of their assessment of the economic situation here. Things have obviously been on an improving path over the last couple of months. And with that improved economic assessment, I think they felt that it was not really the appropriate time or necessarily necessary to augment the programs that they already have in place. Having said that, obviously market expectations were up here that they would come through with additional measures. So in light of that expectation having been set, there was definitely some disappointment that they did not augment their existing program.
Yeah, and I guess what really shocked investors was the fact that Kuroda seemed to signal that he was okay with the short-term swings and the volatility we're seeing in the stock markets and also in the JGB yield. Do you think that's an issue ultimately to him, or do you think he's actually going to be, he sleeps well at night despite the big swings that we're seeing?
Well, I'm not sure how well he sleeps, but obviously I don't think the central bank wants to see persistent, volatility in financial markets continue. On the other hand, what they have embarked on is clearly a complete regime shift compared from his predecessor's program on monetary easing. So I think the markets still obviously have kinks to sort out in terms of how the exact operations are being conducted. Unlike in the Fed's case, the Bank of Japan, for example, is not giving that much forward announcement in terms of, when they're going to go into the market, how much they're buying at each time. And so this lack of transparency, I think, is also contributing to the low volume in the bond market and therefore the increased volatility. But I think having said that, if you again go back to the fundamental data that's been announced in the last several weeks, consumption trends are picking up. The corporate sentiment is improving. If you look at inflation indicators, especially wages, they're actually on the mend, with bonuses up about 7%, the highest increase since 1990. So if you think about it in the broader picture, I think this agenda to exit Japan from prolonged deflation is working, and therefore with that new backdrop, I think it's only natural to see some volatility. But clearly I think what Kuroda and the Bank of Japan need to do is make a more explicit commitment that if interest rates rise ahead of what fundamentals would dictate or justify, that the Bank of Japan stands behind the market, will do whatever it takes to make sure that things are under control. And that, I think, is a gap in perception that still exists.
Kathy, let's get some quick reaction to the machinery orders. As a person looking at equities, does this impact your view at all?
Yes, I think that the situation in terms of the stages of the recovery, so to speak, in the Japanese economy, I think at present is, as I said earlier, I think you're already seeing clear evidence that consumer sentiment, consumption is recovering. You're seeing housing investment, the residential property market, the commercial property market improving. What you have not seen yet is the corporate sector regaining confidence in using the very large piles of cash they have on hand and the anticipation of very sharp rebound in profits coming through to spend that money, to invest that money, particularly in domestic capex. So I think that that's probably the last stage of the recovery that's yet to come. This number, I think this print today of machinery orders being quite weak, I think is just reflective of it's still taking corporates a bit longer to come to grips with, are we really exiting deflation? Is it really safe to take some of my excess cash and plow it into the domestic economy? Is the yen-dollar rate going to stabilize? Because it's been all over the map. So I think there's a lot of uncertain factors which are coloring and infecting corporate sentiment right now.
Well, Kathy, you remain very bullish. You're predicting the Nikkei to hit 17,000 over the next 12 months. The Topix to hit 1,400 over the next 12 months. But what about the yen levels? Don't we have to get weaker from here to hit those targets?
Yeah, so our forecast is for further yen weakness, and this is frankly more to do with what we expect out of the United States and out of the Fed, as opposed to what incrementally more we think the Bank of Japan is going to do on Japanese monetary easing. Our house view is that the U.S. economy is going to reaccelerate in terms of its growth path going into the second half of this year, reaching upwards of 3% growth in the United States going into 2014. With that, even though the Fed may not change its policy rate, we think market expectations, as you've seen in the last several weeks, will start to drive interest rates in the U.S. higher, and that widening interest rate differential between the U.S. dollar and Japanese yen will help weaken the yen a bit further. But again, this is not the full story of the Japanese profit recovery. Remember, if the economy is coming out of deflation, keep in mind, Japanese companies have clearly pared down their cost bases very aggressively, and with a little bit of top line, the operational gearing is massive. So we're still expecting over a 60% net profit rebound in the current fiscal year. So even assuming the yen doesn't weaken dramatically from here, we'll still get a V-shaped recovery.
Kathy, I'm running out of time, unfortunately, but if you can tell me in 45 seconds, when people ask you, and I'm sure your clients do, is this Abenomics recovery for real, what do you say to them?
I think it is for real, and obviously we have a very important election for the upper house coming up on July 21st. The true test, though, I think, of Abenomics is post those elections. Is Prime Minister Abe and his cabinet really going to execute the agenda of structural reforms? Frankly speaking, I think fiscal and monetary stimulus are relatively easy parts of the Abenomics agenda. The real hard part for politicians, for bureaucrats, and for society is yet to come. But I've sensed from speaking with the LDP, from speaking with the bureaucrats, there is a heightened sense of urgency. They cannot wait much longer. So I do think that so far it is for real.
Thank you so much, Kathy. Great seeing Kathy Matsui there of Goldman Sachs joining us live from Tokyo.